Good morning, everybody. It's Thursday, June 17th, 6:30 a.m. Prices of Bitcoin currently at 39,400 and some change. Today's analysis, we're going to cover the low time frame outlook on Bitcoin, and we'll also cover the higher time frame outlook on Bitcoin, but we'll also cover altcoins and which altcoins look best to bounce, my thoughts on the current market structure, and if we're going to still keep heading down in the bear market, and what other things I'm paying attention to. So first things first, we're going to start off with 15-minute time frame. All right. So I think the most important level in this area, in this context right here, is these equal lows, which were tapped right into. All the liquidity was taken here, reclaimed right there as support, right? If you look at that, reclaimed as support, and now we're moving up away from that level. The other important level in this range right here is this weekly open marker. I typically map out weekly opens and monthly opens on all my charts because I find it particularly helpful that these levels, in my opinion, are the ones that get most respected when price action comes towards those levels. So with the weekly open, we have 39,000 right here, and price sitting just above it and sitting above the 38,675 level. Now, in this context right here, we're actually relatively bullish because we've reclaimed this first level and the second level. Now let's zoom out and go to the hourly. What do we have on the hourly? Okay, on the hourly, things also look decent, nothing too terrible. All right, what do we have on the 4-hour? The 4-hour gets interesting because on the 4-hour, you recognize that this is still a level that was largely untapped to the upside in terms of short liquidity to be taken. So it's entirely possible that we make it up here and then maybe roll over or hold up here, and then we press up to 45 and then 48 and 50. I think at present moment, we are closer to a couple levels that I would really like tagged. First one being this monthly open, and the second one, maybe, just maybe, we come back all the way down here, which I don't think is necessary. I think the monthly open is far more of an exceptionally, strong retest level that we might come back to. Now, the other reason why I believe we might come back to the monthly open is something that we often follow in the Bitcoin futures market from the CME. So if we go on the daily right here, we have this gap, right? This gap is kind of unfilled from June 11th, right? We still have maybe another couple $100 to the downside. With this wick right here, you could say the gap is filled, but really there's probably still a couple $100 left, right? Typically for a gap fill to be counted as a gap fill, what you want to do is where the previous candle closed on Friday, like last Friday right there, the wick has to at least come into that area where the gap, or rather where the previous candle closed. And that's the definition of a gap fill. So yes, you could say this is a partial gap fill, but not completely. It's also possible that maybe we don't need a complete gap fill. Okay. Sometimes I tend to believe that the gap fill thing is, maybe something as a meme. I wouldn't really call it manipulation or anything because it is very real. There's trapped traders, from their position from last week. If they want to use their money to be able to push the market down to get out of some of their positions right here, that's possible. Okay. That's why these gap fills happen, right? If those traders are not doubling down on the upside and they're pressuring the market down to close their gaps and close their hedge positions right here, then that's how the gap gets filled. Okay, that's really all they are. It's just traders who are trapped and left behind in the gap, and their incentive is to push the price further down, however possible, to be able to fill this gap and get out of their positions that they may be trapped in. So that's another reason why we believe that this 37.4K, and then that matches our June monthly open level right there, as you can see, right? So I believe a retest there is warranted, something like this. And if that happens, like I stated on the video yesterday, I'm hoping to go long here. First target, probably back towards this level. Next target, 42. And then the following target, maybe like 45, 48. Okay. On a daily basis, things look decent, right? We actually came back towards a very key resistance level. All right. So if we look at it this way, on a daily basis, we actually came back to a resistance level, which is basically where these prices got capped previously, right? This was like the whole Elon pump thing that happened in this area, right? So I believe that this whole thing can be attributed to the whole, Elon thing that happened a couple months back. And then this drove us up further. We distributed here and then sold off. So we're basically back under that same area now, right? Back under where Elon basically got in. So this could be a good thing, right? It could be a good thing, but I guess it could be a bad thing, because if you retrace the entire pump from where Elon got in, well, then what's the next narrative from here for us to push back up? Is it Michael Saylor buying another 500 million or $1 billion worth of Bitcoin? Maybe, but maybe not. Maybe he already bought. Maybe he already bought in this chop or over the last several days and we just don't know it, which would be even worse, because if he bought and the price is still down here, then we're really screwed. But if he's buying now, turning on his TWAP, which is the time weighted average price, maybe we do head up. But this is a key resistance marker right here that you're paying attention to. Okay, this red zone, right around 40,000, let's just say. Important marker. We have not broken above that. Until we break above that and hold, then we can start talking about higher prices. Until then, we are range bound. And in the range, this is all we're doing. We're traversing nicely in this ascending channel. But like I said, we're getting rejected right here around 39,450. Climb up above this. We could probably head back towards this range high around 40,900. Break outside the channel. And then, like I said, June monthly open is my next target. So overwhelmingly, I think it's pretty clear to understand that we're in a large range, haven't really accomplished a whole lot. Things may look bullish across the board, but they're really not, right? All we're really doing is just moving sideways, okay? Good thing is we've moved off the lows down here, okay? So I'll give you that. But aside from that, have not broken out of the range, have not broken above key resistance levels like this daily marker. So I stay cautious, okay? Cautiously optimistic, but cautious nonetheless. Now, in the altcoin world, I'm even more cautious and hedged and actually short. So what I will say is about altcoins is first you have to go to the Bitcoin dominance. Once again, covered this in the last video. I talked about when Bitcoin dominance is this slow and is trying to lift away from the lows, and Bitcoin prices are just traversing sideways right here. Typically what that means is whether Bitcoin goes up or down, okay, I believe Bitcoin dominance will go up. And that negatively impacts altcoins, which means that if Bitcoin hits 40, 42, 45K, or if it hits 38, 35, 33K, doesn't matter whether it goes up or down. I expect for the most part, altcoins like Ethereum and all the DeFi blue chips, whatever altcoins that we have that we watch, I expect all those to get hit negatively. Because I think Bitcoin is really trying to suck the money flows and the strength out of altcoins. And this is actually visible if you look at the altcoin pairs of BTC, right? If you look at ETH BTC, actually, let's look at this chart right here. It's actually been going down for the last, several days, or putting in a lower high. See that? This was the first big shakeout on ETH. This is the next leg down right here. Let's check out ADA. Same thing. It's barely hanging by a thread on support. So if ADA, ETH, let's just say Link, these are some of the bigger altcoins, right? We want to pay attention to the bigger altcoins anyway. Again, Link up pretty, hard shaking right here. So if these other altcoins are already showing you a dollar value pullback, a BTC value pullback, and BTC itself is showing you that it's still in a range. So if BTC heads down, I expect these other altcoins to get hit hard, pretty hard, okay? If BTC heads up, maybe, just maybe, the altcoins might move sideways. Sideways at best, but at worst, again, they could also head down. So for that reason, I'm actually short altcoins. I told my Advantage members that several weeks ago. And so we've been holding on to some shorts. Most of them are in profit. So now I'm just waiting. Now the waiting game for me consists of two things. What will Bitcoin do over the next few days? And say something like Ethereum and other altcoins are very, very close to this structure being broken, which is this higher low structure. It already has a tightening consolidation structure because from here down, you have just a continuous lower high set, right? So what you really have is this, which is compression. Compression typically happens before expansion. I just don't know which way it's going to expand. Statistically, what we just spoke about with Bitcoin dominance, Bitcoin price action, statistically, this should actually break down because the odds are not in favor of altcoins right now. They're actually in favor of Bitcoin, which is one of the reasons why I'm not really wanting to short Bitcoin heavily. I have some scalp positions here and there that I take for shorts, but I'm not going to short Bitcoin outright because I believe that Bitcoin statistically is favored to maybe come back here and take off, or who knows, maybe it already did a retest right here. And from here, it's going to take off. But in any case, I don't think I want to be short Bitcoin, at least not heavily. I may want to be, in fact, long Bitcoin, short altcoins, or long Bitcoin and cash out of altcoins or hedge altcoins. But really, those are the only choices that I see that are safe and probably more lucrative. So the important marker that we need to pay attention to on ETH, because we have this compression structure developing, is this low right here. Because if this compression is holding Ethereum as best as it can, breaking this low would be bad. That low is around 2250. Okay, so let's mark that out. See, this is that low. See that? It is critically important for us to hold this low. Even breaching below it is not a good sign, because even breaching below it tells you that you just stopped out basically this whole trend of higher lows, and stopping out these people who bought maybe here or anywhere really. Stopping out those people is effectively weakening the strength of this Ethereum higher low structure. And you don't want to weaken an already relatively weak looking asset like Ethereum, like altcoins. You want as much strength to be retained as possible. So keep an eye on that marker, 2250. You don't want Ethereum to breach below that. And I can guarantee you that if it does, pretty sure other altcoins are going to start dumping too. Some of the ones that I'm closely paying attention to that I believe will probably dump as fast, if not harder than Ethereum, probably something like Link. Link is down a lot, right? From the high over here, Link is down about 55%. Sushi is another one. I really like sushi, but man, it's gotten pummeled from this high right here. It's down 61%. Even the Solana ecosystem coins. Solana itself is doing okay. Solana is down from the highs 30%. Solana ecosystem coins like Radium from the highs 75% almost. Where's SRM? That's another Solana ecosystem coin. From the highs, down 67%. I mean, this is crazy stuff. They're down a lot. All right. Matic, which is kind of like a Ethereum play, also down 45%. Now, Matic is a particularly important coin that I watch, which I personally believe has a huge future, but in bear markets, I don't really care about the narratives. I don't care how well they're doing, because I believe in bear markets, everything is correlated with Bitcoin. I don't care what altcoin you have. And guess what? Bitcoin is then correlated with the macro picture, which is the stock market, interest rates, and what the Fed is doing. And we'll talk about that in a second. But going back to Matic, here's a very important level that I'm watching in Matic, 153. See, we broke up below, above it 2 days ago, but we broke below it just yesterday. Now we're holding just below this 153 marker. If we stay below 153, I believe the next retest is probably 126. If we can get above 153 and hold, it's entirely possible that we go back towards these highs, this consolidation structure, which is $1.85, $1.90. Okay, so all the altcoins, they're literally sitting just on the cusp, the inflection point of getting sent down further, or maybe breaking through, holding up above their key resistance levels, and maybe breaking out. All right. Macro picture, which is what Bitcoin follows. So I put out a lot of updates for my Advantage members. One of the updates that I wrote about yesterday was about what was happening with the Fed meeting, the notes, and what was happening in the dollar, what was happening in the Qs, which is basically an index for tech and growth, and what was happening in Dow Jones, and finally, what was happening in gold. Why are these four assets important? Well, because they control the macro narrative of what the Fed is doing. And the important part about the Fed that I took away from the notes yesterday was, first of all, no interest rate hike until 2023. Okay, that's a good thing for people in the stock market, people in risk assets like crypto and US stocks. GDP expectations higher to 7%, which is basically a good sign for the economy, which is not such a great sign for tech and growth stocks, because if the economy overall is doing well, the money might rotate into things like industrials and utilities, things other than just tech and growth stocks, right? Of course, those will go up, but they may not go up as crazily as they did earlier on in the year, because the whole idea of gambling and putting all your money in tech is not as lucrative as an option when you have such high GDP expectations. The other part is higher inflation expectations, but no tapering discussed. So this is also somewhat of a decent sign, because higher inflation is not good, because that could imply that the Fed needs to be a little bit careful about printing money, about being so loose with their monetary policy. But the no tapering means that, okay, well, they're concerned about inflation, but they're not going to do anything about it, at least not yet. So basically, what I summarized from this was a remainder of 2021 should be relatively bullish for crypto and growth in tech stocks. Unless things change over the next few months, where the Fed does get really concerned, maybe inflation gets out of hand, some exogenous event happens, I don't know. For now, as of yesterday, these things look decent and should be good for US stocks and probably crypto. Now, finally, we have to keep that in context with where we are in structure. With Bitcoin, we already know relatively well that we're under a very key SR level, okay? It doesn't matter sometimes, when you look at what the Fed is doing, the stocks and whatever, when Bitcoin and price structure in any asset shows you something like this, at the very least, you should be concerned or taking profit or hedged, or at the very most, maybe you could just be outright short. You can just say, all right, well, I'm just going to stay short until this level gets reclaimed, which is okay. It's also okay to not do anything. If you want to stay in cash, or if you want to hang on to your positions because you have some really aggressively bullish targets for Bitcoin and you think that Bitcoin is going to go much higher in the next few months, or altcoins are going to go much higher in the next few months or next year, or whatever your time horizon is, then it's okay to stay long and stay spot long. But just know that you should always have a mitigation strategy just in case things don't go according to plan. That's the whole point of risk management. Just in case things don't go according to plan. So where do you cut your losses? Where do you take your profit? Where do you move your stops? All these things are something that we discuss in the advantage side, all right, to help our members make the most informed decision. Now, last thing I want to mention to y'all is going along with the note of whether you want to stay bullish or bearish, or you want to stay in cash or whatever. I want everybody to be careful in this market, because I wrote this note yesterday and I've said it several times, even weeks ago. In crypto bear markets, you should not only expect the price action to be boring and bearish and bleeding, but you should also expect that a lot of the projects that you thought highly of may get hacked, they may get rug pulled, you may get exploited, you may get scammed. Any amount of crazy things can happen in crypto because this is the wild, wild west and no one is your friend. Whoever's promising you high yields, this coin is going to go up 10x, 50x, 100x. Just take that with a grain of salt. Do your own research. It's one of the many reasons why I don't ever promote these new projects, pre-sales, right? I don't ever tell you guys to buy or sell. I just do what I do. You can listen to me or not. I don't really care. But I encourage you guys, if this is your first bear market, be careful. Don't lose all your money, because you need money and you need capital to be able to make more money in the next bull market. Or even if it's a bear market, who cares, right? In our community, we make money both ways, okay? Or at least try not to lose it, right? So anyway, hope you guys find this analysis helpful. Hit the thumbs up. All right. Cheers, everybody. Take care.